Hey guys, often to do it. Welcome back to another episode of our Forex preview. Now this week we'll be taking a look at the euro dollar where we'll be looking at a possible long-term opportunity. So without wasting any much more of your precious time, let's get straight to the charts. So, as always, we start our technical analysis using a top-down analysis, meaning we start by analyzing the market from a higher time frame. And in our case, we take primarily three time frames, which is the daily, the 4-hour, and the 60 minutes. Where in our case, the daily is going to be our higher time frame, the 4 hours will be our intermediate time frame, and finally the 60 minutes will be our execution time frame. This is where we place trades and take profits. Now, all we want to do, as I was trying to emphasize week in, week out, whenever we get onto our daily chart, the only thing we want to do is to identify the overall direction of the market. And to do that, we can try and add our tool. But I'm just trying to do this. So let me try and crunch up the screen and take this. This is the lowest low price action. We lead up, give us a bit of a pullback, and finally price action is still up, and we could say a bit of a pullback. So overall, what would you say about this market? Are we bullish or bearish? Now it's pretty evident to everyone that we're in an overall uptrend. So that's the first thing we want to do. Now, after identifying our overall direction, this is where you want to identify all significant structure levels. Now, this is, for me, this is my most important part of my trade, because if I get my structures wrong, that I might have ruined everything, because structure is the most important thing to trading. Structure acts like a magnet. This is what price action usually gravitates to. So in order to do that, I want to start drawing my structure level where price action is currently at. So I would take my tool over here, and I see major resistance levels. You see price action hits up, rallies down, hits up, gives us a spike, and had a bit of an indecision. So I might consider this level a pretty significant area. And if we put it across, you see we had a bit of an imbalance. And if we drag it across, you can see that this is where currently price action is reacting. This is where we're finding support. So this is our first important level. And if we could go up, and if you've been tracking down this period, remember that we were in a range market. We were in a satisfied. We just currently managed to break this significant support level. And to do that, this is where I see another support, another support, another support, another support, and a bit of an imbalance. So again, we might give this level a bit of significance. Okay, and let's just try to change the color. I don't know, any color, any color. Okay. So already we have two significant levels that we're looking at. This is the most significant level that price action just broke, and this way price action is currently supporting. Now we identify that price action is an overall uptrend. So if price action is in an uptrend, then in that case we'd probably want to buy the market. And after that, we want to see is price action at a demand area. And as you can see, past resistance has to become a future support, turning this level into a nice demand zone. So now, starting to form a bias. Then we're looking for a buying opportunity. We identify the price action as an overall, is at a significant demand zone. So the next thing we want to do is all our filters. Now, we've did the most important part, identifying direction and forming a bias, and solve that with a significant structure level. So now, all the additional stuff we'll be doing now is just building a solid case for entry. This varies from trader to trader what you like to use. Some traders prefer using trend lines, Other traders like using the stock care, just a bunch of other things, Bollinger Band channels. It varies from trader to trader, but this is how we personally go about it at FX Link. First thing we like to use is an ABCD pattern, an equal measure move. From this A to B, we want to see where this move terminates. If I could copy and clone this, and if I put it right here when the move starts, you can see that we have a completion of an ABCD pattern right at our demand zone. In order for us to see exactly key turning point, because we're in a short-term downtrend, so we want to see where this downtrend is going to get exhausted or going to give us a reverse back to the upside. So the next thing we want to use is our retracement tool. This is a key turning points for price action, and I could draw it first from this low back up to our swing high. And as you can see, right where we have a completion of an ABCD pattern. Okay, let me just try to pull it up slightly up. Yeah, this is so we get a 618 retracement. So a bit of a confluence of our 618 and our ABCD pattern. We can try to add another retracement tool from this swing low back up to our swing high. And what do we get? A 786. This way we get a 786. Is it visible enough? This blue line, this way we get a 786. So we have a 786 and a 618 cluster plus an ABCD pattern. Now slowly but surely, this is where we're building a sort of case for entry. Now, if you saw our past video on my market review, this is the video just before this one. We were talking about something called confirmation bias, how all these confirmations could act against you. Now, for this video, I cannot dig deep into it. So if you want to know more about confirmation bias, please head down to the second part, to the video before this one. You can see it's written in Forex Trading, how to deal with confirmation bias. So finally, the last thing that I see on my daily chart, and which is my most important for me, I give it a lot more significance, is that look at our lowest low. This is the lowest low of the price action format. And look at from our RSI. If I could put it where price action is currently at, what is happening? Take a look at it. It's sloping to the downside. RSI is giving us an opposite with our price action. So this is one of my significant filters that I cannot go without, which is a bullish divergence. And finally, price action just touched our oversold state, showing us an exhaustion of sellers. Now, as I leave the high time frame on my daily chart, I'm leaving this chart with a bullish bias. As you can see, I got all my necessary filters. I've identified all significant structure levels, and for me, this is where I want to switch to my 60 minutes to see exactly how can I hop in this trade. Let's try and remove all of this Fibonacci tools, just to try to make our chart a bit clear. Yeah. So as I get to my hourly time frame, this is where I want to place my trades. So the first thing I notice is that RSI is currently approaching an overbought state. Now, I wouldn't want to buy where price action is overbought, because this shows me a bit of an exhaustion from buyers, and I want to get active where buyers will be most dominant. So at this point, this just tells me that I have to be a little bit more patient. I'd have to wait for price to at least give me another push to the downside. Now, how far to the downside? That will be the question. In order for me to see how far I'd wait for price action, I use my extension tool. From this X to A, back to my A, back to my X, I want to see key turning point, exhaustion point. And as you can see, if I could grab this, right at this level, this way we get a 1618 back to where we had. Let me change the color. blue. We get a 618. Hey, pardon me. Sorry about that, guys. We get a 618 back to where we have a completion of our ABCD pattern right at this level. So for now, as soon as the market opens, I have to be a little more patient, because one thing about the market, before it goes up, the market has to go down. And while the market is going down, I won't be selling. This will be all the amateur traders chasing the market. As soon as the market pushes down, this is where all the professional traders will be slowly placing their orders. And this will be the amateur traders chasing the market. And professionals would rather die than to chase the market. They will be slowly waiting for the market to give them a better price to buy. So say for instance price action does give us a rally to the downside. And finally we get our oversold state, and possibly we might get a bullish divergence, which is one of our filters that we expect to see. And if we do get a bullish divergence, the next thing we want to see on the price action will be a double bottom. And after getting a double bottom, we'll wait for a higher close. And at that point, we would have had all our filters in check. And this will be a point where we want to get involved in the market. This way we're looking at a long opportunity. So, okay. So now the next question will be take profit. How do we take our profit as soon as we enter? For that, I use my retracement tool. I take it from this X to A, assuming the price action terminates somewhere in this area. I'll have a completion of it. And we'll take our position tool. Say we have an entry somewhere at this point. Take profit. Our first take profit would have to be at 382, back at this level. Stop loss would have to be below our lowest low, after getting our lowest low, but assuming it's somewhere below our ABCD completion, we could take it 10 to 5 pips below. So we'll be looking at a overall close to an overall 43 pips worth of risk, and our first take profit could offer us a total of 122. Now I must say this is too wide. I'm just looking to get in and out of the market. I'm not looking to hold on till price action gives me 100 pips. So as this is our first initial take profit, one might default it because of structure. You might be looking for price action to get back and hit our retest of structure back at this area. And this will still be fun, because if you take a look at it, you'll be risking 43 pips for a total of 73. Not quite a 1:2, but a 1:6,8. Still a good trade to take. And after that, assuming price action just gives us a push and you're looking to hold on, we might wait for a break above, close above, and probably a retest of structure. Okay, and probably we would expect to get a retest of structure. And as soon as this happens, this way one might be looking to break even and looking to continue to head up to our first initial take profit, and we're looking at a total of 119 pips. And for me, guys, I might be looking to hold on back into a 618, but I want to get a back where we had this support level, where past support has to become a future resistance. This is where sellers will start to get active in this market, and I want to get out as soon as sellers want to get involved. So this is my analysis for the week. I hope you enjoyed. If you like our content, please hit the thumbs up. And if you don't want to miss any of this on a weekly basis, make sure you hit the subscribe button. Tell your friends about it. Tell your friends to tell their friends about FX Link, and tell your friends to tell their friends to tell their friends that FX Link is in the building. Oh well, I hope everyone's good. I'll see you next time.